there is a pretty remarkable earnings growth and guidance coming from some of these chip names as well. How are you viewing this particular sector? And when we got a lot of mention from the technology CEOs are talking about capacity constraints coming through when it comes to chips and power.
Yeah. Sherry, there's so much there. I mean, first and foremost, what we are hearing from all of these companies, one of which was Coherent, which reported tonight in the States, they're saying that as soon as they fill an order, they have more demand. So they are trying to catch up on capacity, and they're unable to. And this is a chip peripheral player. Same with Lam Research, which we own. We do not own memory names. They tend to be very cyclical. We kind of missed this particular one, but we've owned many of the other chip names and still do, like Broadcom, which is up after hours after Google's CapEx announcement, and Nvidia. So I think as an investor, you have to, you can't kiss all the babies. We are going to miss some, and we're also going to get some wrong, but the goal is to be mostly right, and that's how we've outperformed the S&P over the last few years.
Yeah, but would you say that you are in general sort of pivoting away from, in the big picture, some of the SaaS names, because you don't know who is going to be really the AI winners and who is going to be able to keep their moats, and somewhat pivoting towards the hardware story, perhaps power story, commodity stories?
So yes, so we were already overweight all of those, and what we've done with SaaS is we've been particular. So we've added to Microsoft, we've added to ServiceNow, which has been hard to stomach, but we do think they're a long-term winner. And then, as I mentioned earlier, we've moved away from Adobe and Salesforce. But I think in terms of the hardware side of the story and the power infrastructure side, one of the names that we're not talking about is Tesla. And I think this is an important game to watch as we move into the next stage of Tesla's development, because it's not just going to be space data centers, but it's going to be full self-driving, AI, Optimus, all of the things that I think are going to carry us into the next decade.
No, you totally read my mind, because I was going to ask you a Tesla question next. So do you think the robotics angle is going to be really the next catalyst for this particular stock? It is down 3.7%. It didn't run as much as other Mag 7s or some of the weird moves that we've been seeing so far this year in some of the hardware names that we were talking about. Do you think this is Tesla's turn this year?
I do, actually. It's in my 6 for 26, Sherry. I think, it always matters when you get in. So we were adding to the name during the tariff tantrum, that period I described for you, at $240 a share. It's up, more than 50% from there. But for the year, it kind of had a moribund year. You have the and stay with me on this, the SpaceX XAI potential merger. I think that will have positive benefits for Tesla. I wouldn't be surprised to see all three of those companies combined. Full self-driving and robotics, I think, are the future of Tesla. But space is super compelling in terms of what we can do to solve problems here on Earth. So I think in 5 years, we're going to look back and say we probably couldn't have owned enough Tesla, despite valuation. And I say that as a tried and true or trained value manager. But Amazon is a name, if you'd have bought it on May 15th, 1997, when it went public, you'd be up 250,000%. So valuation is one of those things when you're dealing with a transformative company that really doesn't come into play as much as many investors think.
Yeah, of course. And it matters when you get in. So do you recommend getting into Tesla now? And also, what kind of moment do you think SpaceX IPO will be for the sector as well as Tesla stock itself?
I do. Yes, I think you can get into Tesla at these levels. This is another name where, when is it too late? I don't think it's too late, because this, remember the pay package, and Elon Musk has been able to achieve every goal put in front of him. He calls himself programmed for war. And so this is a guy that is expected to increase the value of the company something like eightfold in order to earn his $500 million pay package. I think he'll do it. Of question is over what period. And then in terms of, is this the kind of company that is transformative? Yes, the SpaceX merger will reawaken attention, I believe, to the very critical leadership that Elon has shown in AI, in full self-driving, and in space.
Nan, getting back to this whole recent story about SaaS, software as a service, under threat from AI, some folks have sort of taken a step back and tried to work it out. And they're saying, look, AI agents, if they end up replacing seats, as it's known in tech, that's not going to be great for recurring revenue or cash flow, right? But what it is going to do, though, is it's going to refocus the attention for these software as a service companies onto single-use projects, and therefore on outcomes, which could end up increasing the size of the market or the pie overall. It's just that individual players, they may end up getting a smaller slice of that bigger enlarged pie. Does that make sense to you?
Well, it does. I think every time we say that, well, just for an example, Google about a year and a half ago was written off as not that the search business was going to go away due to AI, and in fact, quite the opposite has happened. They had that botched release of Bard. They quickly changed the name to Gemini, and now they're considered to be the leader, if not one of the leaders in AI. And so I think we have to look at the management teams as well. Microsoft has been written off many times in my career, and they've always found a way to pivot. Now, there have been some long periods of underperformance, but I think just like Sundar Pichai is a competitor, I think Satya Nadella is. And so they will find a way to dominate, but it may be bumpy and it may take some time. So yes, I think we often jump to conclusions based on what we know today, but we don't take into account the fact that these are really great companies managed by really great management teams, and there are other outcomes that can happen.
And I think NVIDIA got a bit of a pickup in after-hours action as we were hearing that pretty remarkable CapEx plans from Alphabet's management. How are you viewing the GPU market? So it's really about who gets to keep the moat in the chip space or the software space. Your investment case for NVIDIA.
Yeah, I mean, of course, we really like the name. It sort of sat there for the second half of the year. But when we were adding to it during the first part of last year, it was trading at $108 a share. So with NVIDIA and with most of these names, you have to be patient and use volatility as your friend. But what we continue to hear is they can't meet demand, and that doesn't count China. So if they continue to see the kind of demand they have seen and have projected they will see, I think this is a name that you can feel safe adding to on weakness, because it is at the center of everything that we are focused on in terms of AI, generative AI, robotics. I mean, this is the company that is leading. And even if they get a competitor, years ago we used to say AMD was just alive to keep Intel out of antitrust problems. Well, look at where we are today. You take a great leader like Lisa Su. She takes CPUs from 0 to 41% market share. These are the kind of firms that we want to be invested in, and they're in this. They happen to also be in the sweet spot of what we think are the important transformative technologies.